Hey, everybody. Welcome back to The Smattering. I'm Jason Hall. And today we're going to talk about something that a lot of people are trying to wrap their head around. Warren Buffett just made a big investment into a semiconductor stock. We're going to talk about that right now. But before we do, just a quick reminder that we get to do these videos because of our partnership with The Motley Fool. If you're looking for great stock ideas, go to our link, fool.com/The Smattering. Put in some info and the Fool's going to give you its 10 best stocks to buy right now. I'm also joined by Jeff Santoro here. Hey, Jeff.
I'm excited to talk about this. It's always one of my favorite parts of each quarter when we find out what Warren Buffett bought. So what happened this week? What did we find out?
This is from the folks over at Whale Wisdom. You go to their website and you can get information as soon as those 13Fs release. And I've got it sorted right here. And you see right here at the very top of the list, this is TSM. That's Taiwan Semi's stock ticker. 60 million shares acquired. That was the most number of shares. Spent around $4 billion. So it's a pretty big investment.
Jason, I know that, one of the things investors like to do is sort of predict like what might Buffett buy or try to figure out what they were thinking. So why do you think he was interested in Taiwan Semi? It's not really in what we typically think of his wheelhouse. So what do you think drew him to this company?
Yeah, that's good. This, you have to be careful too about reading the tea leaves too closely or trying to project. But again, what we know about Warren Buffett, a couple things. We know he started to gravitate more towards technology companies. You think about Apple, right? So there's these two investing partners he has, Ted Weschler and Todd Combs, who are younger, more tech savvy, that have started to bring a little bit bigger awareness to Buffett about those companies. And my guess is that with Taiwan Semi, maybe that's the same thing, right? The influence of Ted and Todd on Buffett's thinking, or maybe one of them actually pulled the trigger. We don't really know for sure. But what we do know is that all three have a very similar investing philosophy. They like to buy great businesses that have real economic moats, is the term that Buffett uses. And basically what that means is like a durable competitive advantage that is really, really hard to disrupt, right? So, and if you think about Taiwan Semi, there's some things that it has kind of in spades that make it just an ideal Buffett investment. Number one is its scale, right? One of the things that it's done is it's built this business as a contract manufacturer. So it doesn't compete with its customers. Not like with Intel, for example, right? It's building out this contract manufacturing business, but it also designs and makes its own semiconductors, right, that it sells. So it's going to be frenemies with a lot of its customers going forward. Samsung, it's the same thing, right? Samsung is the other big fabless or fab operator that does contracts manufacturing, but they also use a lot of those semiconductors that they make in their own products that they're selling that are competing with their customers, right? So it has a much, much more narrow relationship and it doesn't compete with its customers. And because of that, because of decades of investment, it's gotten to this massive scale that gives it some real cost advantages in this space where you have really high fixed costs. And if you're the one that's leveraging your operations at the highest rate, it gives you some cost advantages against anybody else that's not at that scale. And again, because it's not competing, so kind of built on that first premise of not competing with its customers, it gets some network effect, right? Meaning that the more customers that come to it, the more participants on its platform that there are, the more it benefits everybody else. Again, because it helps leverage that scale up and drive down costs per unit, right? So that network effect continues to drive those cost advantages. And here's what that looks like in economic terms. So we have two things, and I'm going to drop off cash from operations here. And I just want to show operating margin, right? So again, this is a company that manufactures an electronic component. And you go all the way back to 2005, about the time that it went public, and it has consistently, through the cycle, and you see these ups and downs, it has consistently generated operating margins around 35% and has grown those into the 40s more recently. And as a result of those high operating margins, it has generated enormous cash flow over time, Jeff.
You have to be careful with the 13F disclosures. You can't really mimic what an investor's doing because of the time lag. And generally, you don't ever want to buy something just because someone else did. But why do you think that Taiwan Semi is worth buying and owning right now?
So again, I think it's a long-term investment, having that ideal multi-year time horizon, as long as you possibly can. There's some really powerful things to think about with Taiwan Semi. So I'm going to start with thinking about something the company did a couple of years ago that often is kind of viewed as a negative that I think was a positive because of what it says about the company's goal. So you go back to 2019 and the company cut its dividend. So this was before the coronavirus pandemic. In 2019, the company cut its dividend substantially. The reason it did that is because management saw this enormous opportunity and growth in semiconductor demand. And you can see that its capital expenditures, again, I'm going to put that dividend chart back on top. So you see that its capital expenditures, when that dividend cut happened, absolutely rocketed higher. And I think the company is already on track to spend over a decade period, something like $250 billion on CapEx. So why is that important, Jeff? It's because of the secular tailwinds, all of the structural things with semiconductor demand that are going to continue to drive demand, and they're going to strengthen all of those competitive advantages that we've talked about. And what that's going to do is it's going to lead to continued growth in that operating cash flow number that we talked about earlier, right? So grow that operating cash flow per share over time as the semiconductor industry continues to expand, the use of semiconductors continues to grow, and Taiwan's competitive advantages get even stronger. This is a company that is going to continue to be a cash cow in terms of secular growth, and that dividend that it cut for the right strategic reasons is going to fund per share dividend growth, I think, over the next decade.
No investment is without risk. So what do you view as the major risks if someone was to buy Taiwan Semi right now?
So I think the first thing you have to think about, again, the secular tailwinds are wonderful, but there is cyclical risk, right? If we think about the macroeconomic environment around the world, we know that recession is a real threat. And a lot of its products that the OEMs make, the end user, the product is a discretionary purchase, right? A new smartphone, all of these higher end electronic components. The reality is, again, a lot of those are discretionary things. When times are tough, when people don't have as much disposable income, those are the first things that people don't replace, right? So there is risk in the near term, as much as we've seen the stock come down, that if business continues to slow and the cycle continues to weaken, the price could continue to fall in the short term, right? So that's one thing. As a long-term investor, I think you hold through the downturn, look at it as a buying opportunity, even build out your position more. And those lower prices are just really opportunities to buy a great business at a better price over time. The other risk I think that we have to consider is the geopolitical situation, right? With Taiwan and China. We know that's an uncomfortable situation. And that does create some risk. Honestly, I think that risk is probably overstated because as much as Taiwan's independence and the one China policy are kind of clashing, China has hitched its wagon so much to the global economy that disrupting Taiwan Semi would be incredibly disruptive to its own economy, creating another series of risks that, so again, I think it makes it a little bit potentially overstated. Jeff, lastly, I think we should talk about technological disruption happens, right? And often we don't necessarily see it before it already happens. And there is some risk of that. I think it's relatively low risk because of where Taiwan Semi kind of sits in the value chain, because it's the adopter of the technology that makes the best chips. And then the funnel pushes those down lower and lower as the next innovations come out. And I think where its role as a contract manufacturer probably protects it a lot from that technological disruption, but it's something we should be at least aware of.